All right, guys, listen up. We have 5 stocks to break down that you need to watch this week. All of these are reporting earnings, and no, it's not NVIDIA. We broke down NVIDIA yesterday. Go check out that video. We have 5 other companies today to talk about, so smash the like button. Make sure to subscribe. And, of course, if you guys like free stocks, don't forget to get up to 20 stocks from Moomoo with at least a $100 deposit. Use that link down below or go to stocksurfest.com/Moomoo. And, of course, for a limited time until Jerome Powell cuts rates, you'll get up to 8.1% on your uninvested cash. Again, use that link down below or go to stocksurfest.com/Moomoo, and let's dive right into the video. So again, 5 stocks that you need to watch. All of these companies are reporting earnings this week, and we already talked about NVIDIA. Go check out the video from yesterday, right? So the first one is Salesforce, ticker symbol CRM. So let me actually show you guys what we're looking like right now on Salesforce. I'll pull up the 4-hour chart. We'll break down, of course, EPS estimates, revenue estimates, all of that good stuff. So heading into earnings right now, CRM, we have an ascending triangle. Do you guys notice this? Arguably a cup and handle here over the last roughly month of trading as well. So we have the cup and handle, which you guys can see if I zoom in, cup handle, you guys see that. And we have the ascending triangle, which is bullish. Both of those patterns are bullish. Let me actually draw it out so you guys can see what the heck I'm talking about, right? So boom, you guys see that? We're holding higher lows there, and we have resistance, clear resistance at about 265 to about 267. We've had that for a good, at this point, month and a half, almost 2 months. We've been getting rejected multiple times at 265. So if CRM is able to get out of there, let me set my alert right now at $265 per share. Actually, no, wait, let me do it at 266, a little bit higher. If we're able to get out of that point, we could actually start ripping towards 285, 290, dare I say back to the 300s, right, guys? So keep your eyes on CRM. And by the way, 265 used to be support all throughout, looks like April, up until about the end of May, which, by the way, last time they reported, the stock ended up crashing. So this go around is going to be huge, right? Do they drop the ball again, send the stock down big time, or do they surprise? Guidance is strong, which could then propel the stock towards $300 again. So they're looking to do earnings per share of, looks like here, $2.36 versus $2.12 from last year on revenue of $9.23 billion. So pretty good growth there in EPS. I don't have the revenue number for a lot of these companies for some reason. From my source, I couldn't find the revenue numbers from last year, but bear with me, guys. EPS growth is there. Revenue, I believe, is slightly growing. I forget the exact number, but yeah, CRM, keep your eyes on it. I'm watching it for a trade. If it breaks out 266, 268, that general range, for a nice move back towards 300. So the next one is Abercrombie and Fitch, which is ANF. You guys know this stock has gone up like crazy, man. Talk about an outperformer here. In the last 3 years, ANF has gone from $14, it looks like, in September of 2022, not even 2 years ago, and it peaked at about $200, it looks like here, in May, so about 3 months ago, and then it tanked actually down to about $120, so a big dump off there, but now we're back to $170 per share. So talk about outperformance, man. If you saw this chart, you'd think it's like a tech company, a software company, something like that, but it's not. They sell clothes, right? They sell a bunch of clothes, good quality clothes, and the stock has done extraordinarily well. And now it looks like we're actually breaking back out. I mean, you guys see inverse head and shoulders. We're breaking back over the moving averages. This looks really, really good, at least as of now. Things could change, but it looks like the uptrend here is continuing, and they're looking to do revenue of $2.22, or excuse me, EPS of $2.22 versus $1.10 from last year on revenue of $1.1 billion. So ANF is at the top of the watch list for sure. Continuing in the uptrend, it looks like here the company is set to report earnings on Wednesday in the morning. And I almost forgot to mention CRM, I think, is on Wednesday or Thursday. Let me double check that here, guys. Yeah, it looks like it's on Wednesday after the bell. So stock number 3 is Lululemon, which is one of the worst performing stocks this year in the S&P 500. It's down from just looks like the end of December, early January, from 516 to now it just hit 222. Now we're at $269 per share. So heading into earnings, guys, year to date, Lululemon, which it's nuts considering how good this company's stock was a couple years ago, it is down about 46 to 47%, which is insane. Again, one of the worst, if not the worst performer in the S&P 500 index. So Lulu is on Thursday after the bell. And let me just show you guys the 3-year chart on this thing. It's been pretty all over the place. I mean, we hit 480 back in 2021, dumped to 255. So we've done this before. We hit almost 500, dumped all the way down almost 50%. Then we ran to actually over 500, which was a big move. And now we're down 50% again. So people are arguing maybe Lulu does something like this if they're able to turn things around, which is not a problem with Lulu itself, really. The company still makes great clothes, great quality, all of that, but there is a lot of competition, right? I forget there's a couple up-and-coming brands here, guys, and I was hearing also that Gen Z doesn't wear leggings. That was something that was going around, and that hurt Lulu a little bit. I don't know how much truth there is behind that. There probably is a little bit of truth behind that, but either way, it's a pivot point for Lulu. Still a great company, great brand, great quality, but they're just going to have to catch on some trends, man. I don't know. They're going to have to figure it out, which I think they'll do eventually. But I'm not in Lululemon or any of these stocks that we're going to talk about today for that matter. But Lulu's doing $2.94 EPS versus $2.68 from last year on revenue of $2.41 billion. And I'm not looking to really get in this as a trade until we break this downtrend, which, guys, I don't know if it's going to do anytime soon. Let's see what earnings look like here on Thursday. So the next one is Ulta Beauty. ULTA is the ticker, which Warren Buffett, you guys have heard of that guy? Well, he started buying this stock, funny enough, after I started buying it, a little bit ago, but then I sold out of it. Took a little profit, bought some other tech stocks as the markets crashed earlier in August, which I'll make another video on that maybe. I've covered that before here on the channel, but funny enough, after I buy and sell it, Warren Buffett's buying it. So maybe it's going to just go to the moon now. We'll see. But we're at $378 per share on Ulta right now, and this is just like Lulu, man. I think Ulta's they're in the S&P, right? Obviously. I think this one's, I was sifting through worst performing. Ulta is one of them as well. Ulta's down a bunch, over the last couple of months, and it's not looking like it's reversing. We're in a downtrend. We're right at the moving averages. Sure, we might pop here, but it's no guarantee. We're not getting that confirmation yet, but either way, I'm watching it. I'll set my alert, might as well at 385. I'll do that right now. And this is one that I might buy back into. You never know. As a longer term play, we'll see. But I just sold out of it because I kind of wanted to free up some cash and buy. I think I bought more Amazon or Google or one of those. But either way, Ulta, interesting, very interesting. $5.52 is their EPS estimate versus $6.02 from last year on revenue of $2.62 billion. And I lied. I do own one of the stocks on this list. I almost forgot. CrowdStrike, which is this one right here. Forgot about CrowdStrike for a second there, guys. Let me pull it up. Ticker symbol CRWD, which is going to be very important for this week. You guys know the IT outage. We're not going to get into that. We all know that. But, well, I guess we are going to touch upon this. Everybody's waiting to see, kind of the aftermath that we've seen so far from that. How many customers, cut their relationship with CrowdStrike? How is it going to affect their numbers moving forward? Yada, yada, yada. All of that stuff will hopefully, get some insight on that during the earnings call, which we'll get here in a couple of days, I think on Wednesday. Wednesday after the bell. So CrowdStrike, guys, I'm in this. I bought it at about 230, and we're at 271 now, and I'm really, really excited to see what we do next, right? We're at a big resistance heading into earnings, so keep that in mind. We are up a good chunk off the lows as well, which is not the best sign, but we'll see. We'll see, man. If we take out 280, 285, start cracking over 300 again, technically speaking, that is going to be a very good sign. Very, very good sign, the way I look at it. But let's see here. CrowdStrike is projected to do earnings per share of, let's pull it up, I think 97 cents versus 74 cents from last year on revenue of $958 million. And I think for the year, CrowdStrike's going to do about $4 billion revenue growth. At least that's the projection now. So we'll see how that, changes, after the earnings call, which again, we'll get more insight on everything that's going on with CrowdStrike. So what do you guys think? These are 5 stocks I'm looking at right now. Let me know your thoughts in the comments. Do you own any of these stocks? Are you buying, selling? What are you up to? And don't forget to smash that like button and to subscribe here on YouTube. We're almost at 50,000 subs, and you might as well get up to 20 stocks for a moo with at least a $100 deposit, and your uninvested cash will earn up to 8.1% APY until Jerome Powell cuts rates, which that's coming soon, guys. So get on the deal. Link down below. And with that being said, I'll catch you later.